And
can you hear me now? Mega live, going live every week. Fresh. Mega live. Keep it real, wherever you are. We won't be far. See you there.
Wow, a little good energy to kick off the conversation. It has finally arrived. It is the 7th today, and this is the first Canadian North American show from Mega LinkedIn Live. I'm so happy to be here. It's 8 o'clock in the evening here in Denmark. It's a little bit earlier in UK where Kevin is, and in Canada, that's where you will all know what time it is. Welcome to today's show.
I'm here. Martin.
To kick it off today, this is actually a special day because it's the first show we are having in that region, and we have over 200 people registered for today that either watch now or watch later when we send it out. So with that word, I want to welcome Simon Howard. I want to welcome Kevin Steele. For the one who don't know me, I'm Martin. I am one of the co-founders of Mega, and I'm so happy to welcome to the show today. Simon, maybe give a short introduction of who you are, and then Kevin, you can kick the conversation off afterwards.
Sure, no, amazing, Martin. The energy is incredible, and it's only 2 o'clock in the afternoon here, so we just had lunch. So you're probably 4 beers in right now, but so Simon Howard. I moved to Canada in 2018 after 20 years in the UK working with Equifax, Experian, various different people in the credit risk and collection industry. And to start a digital business over here. And so it was a kind of a big challenge just for COVID. And then we came out of COVID, survived. A lot of the work I'm doing over here, I've basically brought a lot of knowledge from the UK and Europe and tried to integrate that. And so we've built multiple different omni-channel platforms, obviously more recently an affordability solution. And now creating an amazing tool with you guys at Mega as well, and so we've joined the AI to our digital platform as well. So it's very exciting times.
Welcome, Simon. And Kevin, you sat there with I don't know what clothes you wrote on today, but you look like somebody who's just about to join a barbecue. And hi, Michael.
Barbecue overall. So my son has kicked the barbecue off, and I've got to be ready by 7:30. So we can keep the time. That's all right. So welcome everybody. For those that don't know me, I'm Kevin Steele. Long time in the credit industry, and a bit like Simon, going back to Equifax and working out in Atlanta and the like many moons ago. Very heavily involved in not only the compliance space at the moment, but the whole area around AI and FinTech, and that's going to be one of the areas we're going to explore today. So I think, Simon, if we can kick off. Because there are a lot of synergies that we're looking at, particularly with regards to some of the clients we're looking at that are global players. But it'd probably be useful just to get a landscape view of some of the fundamental differences you see from the sort of UK, European market to both the United States and Canada that may help frame some of the discussion today.
Sure. Yeah, no worries at all. And so I think fundamentally regulation's always going to be different. So regulations much different in the UK and in Europe to what it is in North America, and whether that's across AI or whether it's across affordability. And so there's some glaring differences where it's there's no sort of real central overarching program at the moment for regulation with AI that was actually shelved under the last government through Trudeau. That it's much more now provincially based or industry led around guidelines versus actual strict kind of regulations. And so what you're really seeing now is people kind of feeling their way. And I think that's the interesting piece, or maybe where we haven't developed as quickly, is because there is no real structure. And I think sometimes we kind of want that structure because then we can say, hey, are we adhering or not adhering? So I think we're playing in the gray rather than knowing which is black and which is white, which is a real fundamental difference. And why is it important out here as well is because technically, if you look at Canada in particular, and I came here in 2018, we're probably sitting around about 5 to 7 years behind some of the technology that's developed in Europe. And so because of that as well, we're kind of catching up, I think, especially if you look at AI, but also open banking, which is obviously, kind of been flowing now in the UK for probably around the last 8 years or so. And what you're seeing out here as well is you're seeing sort of like there really is kind of like a little bit of an employment shortage in call centers. A lot of people still outsourcing, relying on new immigrants in particular coming in who haven't necessarily got the skills needed for the current economy, where, you need to have a bit more in-depth conversation sometimes as well. So because that capacity to serve is a little bit lower, I think that's where we're going to see AI play a very important role to sort of fill that gap, and not necessarily to replace people. I'm an AI enthusiast, but really I'm an outcome enthusiast. That's why I say it. I say if AI helps people resolve problems faster with less friction, then great. But if humans do it better, then hey, let's use a human. So I think we kind of still got to kind of figure that one out in there. But it does give us the opportunity to do something a little bit more than what we've done in the past. And I think now it's given us that opportunity to really reach out to people, in particular, who are really struggling. So approximately 1 in 3 people in Canada are struggling financially. So it's quite a high number. It's a very indebted country, and I think it's got the highest cost of food and housing in the G7. So if you think about that, there are a lot of people out there who are not talking, not signposted necessarily to debt advice. And so engagement is the #1 challenge in Canada. And there's a couple of fundamental differences between what you get in Europe and here. And one of them will be pretty much a lot of phone calls that are going out and land on people's handsets come up as potential fraud. So again, it's about, are we registering the right number? There's concerns around SMS and emails and these other digital channels. So you've got to start building trust. And I think, Martin, you talked about it in an earlier
I was just about to say because you are hitting something there again. I think you're hitting something that will probably go on in the conversation about the financial economy and how people are also do they want to engage? Do they have a need to engage? And how do you motivate them to engage? And I think some of the learnings I had from the UK that is a little bit further ahead down the line, where we talk about vulnerability, we also talk about, but some of those things, if you adapt to them and use them positively to engage with people, I think that's one of the clues here. And then again, down to maybe voice AI, why does it also work in an industry? Why have we seen it work in an industry? I think it's because of the segment that you try to engage with, that they don't like to tell the same things again. They don't like because they don't owe money one place or 2 places because the situation is what it is. So I think there's a key change from just years ago to now about how do you positively engage? How do you see, Simon, positive engagement? What could that look like in your region?
And I think it's interesting because I think the adoption of AI has been a little bit cautious here, which is very Canadian. So it is a very cautious, kind of conservative kind of approach to it. And case studies have been hard to come by, actually. And there's probably a misconception that people might avoid AI. But actually, if you really think about it, I think most people are not too concerned about whether it's an AI or an agent. They just want to get to a resolution. And so where you do have very cumbersome IVR type solutions today, or, long waiting times, everything else, I mean, I think people will adapt to AI once they realize that actually they can get to the resolution a lot quicker. And that's not to say we're going to give AI free rein to do things, but I think the first generation of AI assistants have been a little too basic, maybe cautious, followed too many rigid scripts. And I think what's happened is there's been a bit of frustration with them. And so now it's about what can we learn from other markets that have got less rigid applications, have learned from conversational AI, and then how can we adapt that to here? And I think that will then really accelerate the adoption of AI here. And I think as I said, it doesn't mean that you're getting total freedom, but the measure of an AI shouldn't be how many calls we deflect to a human. For me, it's about how many people that we can actually resolve the outcome. So in other words, are we actually helping them? They liked it and they want to do it again and again and again.
I think that's been important. I think Martin will talk about the difference between deterministic and some of the probabilistic approaches in a minute. But I think it's been very interesting here in our market, as probably others, particularly when you talk about the Canadian market coming out of COVID, and the cost of living. And one of the things that shaped our regulators here, which is particularly around outcome-based regulation, is this, and we all experience it. Your call is important to us, but we're experiencing exceptionally high volumes. And the reality is you get that reply every single time you ring somewhere now. So if there is a bot and it's intelligent and it's capable, you would prefer to go down that route than wait 37 minutes to talk to the tax man, which has been one of the drivers for a lot of the activity we're seeing. But this whole area around trust. So in the UK, there's quite a high level of usage of AI, particularly by consumers with their own sort of tools on their mobile phone, their smartphone. but still there's a caution around big corporates claiming they're doing it for innovation purposes, whereas the underlying piece to it is it's cost saving. So are you seeing where a lot of this tech, the big contact center as service is still predominantly US originated, that actually some of the tech's North American, but some of the adaptions around the edges are being developed in different markets, across Europe and many other markets themselves? Do you see that evolving, particularly in your affordability space and other areas where those become vital in this environment, that you can make best use of agentic tools within these sort of big, nice Genesis type environments?
Yeah, and I think it's interesting. You just touched on something there. So I think where we're starting to see a bit more need is so information just based on, especially with indebtedness. If you're just looking at just credit reports, they haven't always been sufficient in what we need to actually bring to the table. And so now we're having a deeper understanding of, say, someone's true affordability position based on banking transaction or open banking data has become really important. Of course, that's such a new concept over here. People have been trying to implement it, but of course, then you're educating the consumer on this as well, that it's trustworthy, you can do it, et cetera, et cetera. So I think all of it is based on trust. I think there has been a concern over here. AI
about buy now, pay later in North America, because that's a great use case here. Came in July. Real-time affordability assessments hit in July. What's going on your side of the pond?
So buy now, pay later is one of the fastest growth areas. There's also a concern in there as well around controls. And again, understanding someone's true affordability before you obviously offer that as an option. There has been some indications at the last affordability summit that, and we talked to, and through Score Statistical, one of our partners in there was actually talking about the reliance on buy now, pay later on the under 35s. And actually it's causing quite a lot of indebtedness. And losing control of that, it ends up being in pushing the person into an insolvent position, because insolvencies here, I don't know if you've seen it in the news, but are growing month on month.
Just for the benefit of everybody, there's a link in there from Chris around the Canadian market and the insolvency stats. Yeah,
that's right. So I think you're seeing that all the time. So I think now people are saying, and this even came out from the bureaus more recently as well, is you just can't rely on a single source of data, and so additional data, and also deeper interviews with people. But of course, when you have deeper interviews with people trying to understand their affordability, it costs time and money, and also you need skill and experience, and some of that is not there today. So it's a difference between employing an agent and you're saying, hey, all we have to do is ask for a payment, versus you're employing an agent who becomes more an advisor, and then you're saying to that person, actually, now you need to ask some really penetrating questions around why is it you can't pay? Why is it you keep missing these payments? Is there something that's happened in your life? And that's a skilled kind of question in there to actually kind of get down to those kind of nitty-gritty. I don't think we've got that capacity to serve. And because of that, I think a lot of people fall through the cracks. They end up in collections, and then they end up, unfortunately, at the root in insolvency. And as I said to one of my insolvency clients the other day, I said, I guarantee that the first meaningful conversation someone has is probably with one of your insolvency advisors.
Yeah. It brings me maybe a little bit into the conversation about also why we talked a lot, Simon, why have voice, AI voice in this space not hit through in Canada? There was we had some waves also in Europe and UK, and then it was out there. People went back. It didn't really work. I think from that time now things have changed, and all the models, and we are building systems and other building good systems. But one of the things is also the environment get more and more complex. So what is it that the skill set is needed also for voice capacities? That's why we are talking with you about the whole affordability check. So there is also processes you need to go through for this to actually enhance your operation and work in your operation. How do you see in our collaboration, what you and me and Mega Team and you are doing together, how is that plug and play? Where does that fit into the journey? One side is when people sign up to a loan or something, you need to investigate them. How does it sign up in the positive? How can you use it positively? Kevin, we talk a lot about a lot of our companies. Oh, now a new regulation or something new I need to do around it. Why is it a positive thing what you are doing with your product? And maybe tell a little bit about that also.
I think one of the toughest conversations to ever have with a customer is a pre-delinquency one. So this is you're not quite in arrears today, but it looks like you're financially struggling. And so I think one of the things we're encouraging is customers to reach out to their customers as soon as possible to try and get them to engage and share information back. So we're trying to prevent arrears versus secure arrears, right? So that's really important. I think the concern out here for some people is that a poor AI experience could drive your customers straight to your competition. And I probably think you're actually right. And I think where you've developed AI over a period of years and you've got better and better and better at it, I think people shouldn't fear AI. I think what they should fear is bad AI, right? So because I think I often say to people I meet, I say, look, when you're judging this experience in AI, always ask yourself, would I use this? Would I be comfortable with my family using this? And I think that's kind of something that we're constantly asking people all the time. Is this a service that you would actually use? And you've got to learn from that. So as I said, I go back to that earlier comment I made. I think the earlier iterations of AI voice have been very basic, too controlled. Yeah. And actually what you've done is you've created frustration by actually saying, oh, listen, I can't help you anymore. I'm going to transfer you to a human. Unfortunately, there's no humans available. Oh dear, okay, what do we do next? And so it just becomes very frustrating, I think. So we just need to sort of be brave enough to almost say, hey, we don't need to give them full reins, but we do need to have some more meaningful conversations. So if that means, can we talk to you quickly about your affordability position, try and understand the reason why you're here today? And that really will also determine this. Can we even handle this person? So in other words, are we still in a position where we can go, we've got enough information, we're comfortable offering this person a repayment plan and a rehabilitation offer? Or should we at this point signpost a debt advice? Maybe you're too far down the line, so that which will serve the long-term purpose, right?
Right. We've got a question in from the audience, and I probably partially answer this from my perspective. But Simon, from Michael here, how are firms ensuring AI voice agents and chatbots fully comply with the mini Miranda disclosure and validation notice requirements? Don't know whether you want to field that one first. I can talk about what we do over our side of the pond.
Yeah, and I guess that goes back to that. What are the official? There's no official law, right? So there's no law. I think the European directive is much clearer than it is in Canada, right? So then it ends up becoming much more provincial, right, in understand, or regulatory based in regards to an industry. I think the most important things is this: do you have control over what can be said, what can be said? Same as you would with an agent. I think transparency is everything. And I think the ability to know when to transfer a consumer and constantly throughout the process also asking the consumer, do you want to continue with this? Do you want to speak to a human? Do you want to speak to this? Do you want to continue? So I think they're the kind of keys in there to what we've seen. Unfortunately, I think the early case studies, what we've really seen is it's just been an agent type transfer solution. So it's been hard. We've got to hold a person, we've transferred them straight through. Now that can be good, that can be bad, but at the same time, we want to be able to serve the consumer much better than that. I think we've got an opportunity that AI shouldn't stop at the initial voice conversation. It should then flow through in the background. So it should be then saying, can we monitor the agent's call? Did they say the right things? Have we triggered the right next action? So I think AI doesn't stop at the phone call, the initial phone call. It then continues with the agent, trains the agent, gets much better in regards to that. And I think that is important in Canada because I still think there's a skill shortage in regards to actually having meaningful conversations outside of maybe experienced debt advisors.
Martin, if I could bring you in, just our experience that we've seen with even with the UK's largest tax collector and that approach around meeting the Ofcom, ICO and other rules, particularly with regard to human in the loop, particularly in regard to making it very clear you're dealing with an AI bot in the first instance. But our biggest use case by far is identity and verification, where we're talking to huge numbers of consumers, the vast majority of whom seem to be happy talking to a bot. But just talk to us about your experience, particularly given that we work with a number of multinational firms.
Yeah, I think first of all, one of the things that, and I want to go back to that after my little explanation, what is actually back to tell me once and not 200 times. So I just want to put that in your mind afterwards. I see it's right, it's complex, and you said something right, Simon, when you do this. The reason I believe we work with Megan and work with our clients because we are deterministic voice. We don't hallucinate. We hallucinate 0%. It's because we have built our technology like that. That's important because, as you said, the customer need to go through a process, and in finance and in compliance regulated environments, that's everything. So to make it work, an identification process is the first process, and that needs to be 100%. And it's not easy. It's not just a bot, because you have people calling inbound in noisy environment, the kids screaming in the background, and etc. And it needs to translate very special accents to say it. I hear some conversation where I think, oh, a human would not be able to understand that. So that's what it can work, and it doesn't work if client need to circle around and being thrown back and forward, etc., etc. Especially in this environment, I think you are more patient if you're going to book a hotel or ferry to go on a cruise ship. You're not patient when you do a call in to pay out a debt to talk, and you are sensitive as a person. So there is something about this is how to deploy that. You have to get that correct and fast and correct experience for the client. So it was complicated to do the IDNV because there are 0% room for mistakes. So that we spent, Kevin, 8 months of just rolling that out. Then you're right, be transparent. A lot of clients, actually some of the US clients said, do we need to tell it's a bot? No, you need to in some regions, and then you can, in some regions you don't need to tell, but you should do. You should, as you said, Simon, hey, I'm an AI assistant, I can help you. The moment you want to speak to a human, let me know, I will transfer you. If you are vulnerable and you say so, and you say words, or you are frustrated, or you lost your job, then maybe it's not an AI assistant that should continue that call. Hey, I can hear, I think it's better you talk with a human, let me transfer you. So that human in the loop is important. And I normally say a lot of this to other people. I have run call centers for 20 years with 600 people. I am a strong believer in human interactions, but I'm not a strong believer in humans doing unnecessary work, like an identification process, like, do you want to pay by credit card? Do you want to set up a payment plan? Do you want to go through, and that's over to you guys, an affordability check? Maybe that's okay to do with an agent, because an AI agent doesn't judge you. It doesn't care. It's not judgmental. That's why this is a good segment. So maybe, Kevin, come a little bit back about this. Tell me once, not 200, because I think it's an important part of the whole conversation.
It's a big part of our agenda here, where we're dealing with a people-first, customer-centric approach rather than a product-centric one. So to many of the points Simon's made, if you're in arrears with your local authority on your council tax or your energy or your water, you're likely to have arrears across multiple providers. So this holistic view is very important. Sharing of what we would call vulnerability data, financial vulnerability, as well as non-financial specific accessibility needs and the like. That is, I mean, I'm a director of the Vulnerability Registration Service, but it's quite evolved. But I think it's fair to say, Simon, when Chris came over and you did your affordability summit in March, and you're doing your next one in November, when the digital DRA boys came over, there were some interesting discussions there around the state of the market, including digital transformation, how you pull third-party data in, and how you use it to build tailored journeys.
Yeah, it's a good reference point. So the digital DRA guys who have a really good approach to collections, and there were people that walked away from that and really changed their mindset. And so we've seen 2 or 3 agencies that have really adopted their kind of thinking, which has been amazing. And mainly just around stop asking necessarily always for the payment, but actually trying to find out the reason why they're there. And that was kind of a big message that they came out with. They were quite shocked that you didn't have to necessarily advertise signposting, that there wasn't any kind of like link to necessary debt advice, that you didn't have to do any type of form of understand affordability. And I don't think you have to do a full income and expenditure check every single time, but, you know, having a deeper understanding just means that when you're setting up anything, whether it be a repayment plan or a suggestion or refinancing, where it might be, you've got to base that on some form of evidence, because if not, it's more likely they're going to break it and come back. And so the last thing you want to do is have that situation where you're just constantly chasing the recidivist payer. At some point, you've got to ask, okay, well, why do you keep breaking this? And it could be something as simple as you're doing it on the wrong date. You've got to do it near my payday when I got more cash. But actually, it might be a deeper issue, because actually there's multiple debts attached to this. Now, the agencies over here will know that there's multiple debts attached. But again, it's a question of, do you try and just collect your own money, move on, or do you try and, you know, suggest that there might be a a better solution for you to go down the route of maybe debt advice or even insolvency. And so it's a really different mindset. And so the mindset me and Chris have been talking to people about all the time is that maybe we don't need to go to the same extremes as what the UK regulation has gone to. But I think right now you need to do more than what we're doing, because too many people are falling through
I'm just going to come back 1 second to buy now, pay later, because the changes that we had implemented in July are really important, because it's now created this gap between a portal where you have a slider that says I can afford $40 versus doing a 2-page income and expenditure, this bit between. Because buy now, pay later is so interactive, nobody wants the embarrassment of being declined at the checkout or the merchant. This is likely to evolve into something that is far more dynamic. We're seeing variable recurring payments in open banking beginning to take off. UK is now dealing with billions of transactions. This is gradually filtering into collections where you can adapt your payment, your time to pay, almost on a monthly basis. That said, you can afford it this month, but you can't next month. Correct. With energy prices across the world going up, lots of people have tipped over from that was just about affordable to actually I've now got £1,700 worth of energy arrears and my direct debit's gone up. We needed to adapt to that. So I think the debt resolution sector has had a bit of a wake-up call from that, because there's an expectation across many sectors in retail finance that if this technology is there, why am I not using it? So I don't know whether you're seeing the same thing in the US and Canada around how do we adapt to both the open banking, the ability for AI to analyze immense amounts of data, and some of the credit reporting you're talking about, where that is a mixture between traditional CRA activity and dynamic data that's coming through a source like open finance.
Yeah, and so the use of, and I'll loosely call it open banking because it's not actually open banking here yet. And so we've been using the screen scraping tools of organizations over here to ascertain banking information, but which is still really powerful to be able to get the 12 months of income stability. And one of the things that we're doing all the time is now encouraging our clients to take a monthly view of the world. It helps the consumer obviously understand what's going on, and it kind of helps financially educate them. But at the same time, it's also given us a bit of an indication, as you say, things can change from 1 month to the next. And if you're working with quite a slim disposable cash position, then obviously that can be very important when it comes to repayments. So the use of open banking data is predominantly being used in the onboarding section. So auto finance in particular have been using it to understand income validation. You've obviously got the subprime lenders where credit reports don't really fulfill the need. And then you've got the whole newcomer kind of section there too, where they're still building their credit reports. So, but it's always been used in the lending. We're quite unique in the sense that we've gone after the market that's actually said, okay, now they're an existing customer. How do we manage them? How do we treat them? How do we engage with them? How do we stop them from falling too far in arrears? Because every time they fall further down, it's cost us more and more money until eventually.
And that's been a key use.
Yeah.
Martin,
so it's all about prevention. And so that's why I see any digital communication coming in is to say, look, at the end of the day, if we don't have the capacity today to talk to the customers that we have, how are we going to manage the amount of people that are falling into delinquency and that continue falling into delinquency? If we can't manage that, then we need to rely a little bit on technology, not completely, but we have to do something because we're just not reaching enough people. They're falling through the cracks. And as I said, the first meaningful conversation happens with the trustee, which is a bit of a shame because I think it needs to happen further up the food chain.
Well, can we just let Martin talk about that? I mean, one of the key use cases we're looking at now here, which has come about as a result of the Financial Conduct Authority activity. Martin, talk to me a little bit the use of AI around quarterly reviews of time to pay, whether it's been a change of circumstance. I mean, that cost effectively, but at scale.
Yeah, but I also just want to say, I think, again, you should do it with all clients. I say to it doesn't matter if they are even applied by law or you should do it when they come into whatever situation it is. You should do it when they come in debt collection. You should use it as a positive outreach. So when you actually begin as a journey, as a customer in a debt collection agency, send that out as a positive. We want to help you get control over how does your situation look like. That's one thing, of course. Then you have those review every third, every fourth, every 6 months because people's life it changes, of course. You want to do that. For me, that's early engagement. It's also positive engagement. And you know what it is? If you do that job correctly, if you get that information in, if you use it correctly, then these customers don't break the payments agreements that you said. So they don't need to go back into fund again and again and again. So I think that use case of massively calling people up, getting that communication and getting that in, and then put it into a software like you, Simon, also where the client will have access to a tool where they can share it again. And with that said, we are just over time now. Kevin, last words on the finish line.
Simon has got 1 minute to talk about the 5th of November. What is happening on the 5th of November?
Well, the 5th of November, obviously in the UK, is fireworks night, which we don't celebrate over here. But so this is going to be the second affordability summit that we're actually bringing to Canada. And last time it was really successful. So it was attended by the major banks, utilities, insolvency firms. So it was a really wide audience there. And what we did was brought experts in from other markets to really understand how do we both understand affordability. The most important thing, the number one thing, was how do we engage more effectively? And because that is, again, the number one issue with everyone, is how do we engage? And going back to the digital DRA piece and their recent campaign, Let's Talk, which I think is amazing. And everyone, if you haven't seen it, go find it, because all it's doing is encouraging people, don't be afraid of talking. And actually, some of the worst advice you could ever get is don't pick up the phone, just hide from us. That doesn't resolve things. That just kicks the can down the line, and you're going to get someone who's a little bit tougher, maybe come after you from a legal perspective, or even if the debt's eventually sold. I think Let's Talk. I think consumers in this country, though, could do with a little bit of help from the regulators, just to say, if you do talk, they're not going to, take the shirt off your back, and there's always a plan and there's always a resolution. So I think it works hand in hand. So a little bit of guidance from the regulators will really help. And I think getting more people to talk and actually, as you mentioned there, Martin, it's hey, listen, we're here to resolve stuff.
Yes.
Not just take the shirt off your back.
This is not an enforcement call message. This is a supportive message. Let's keep that as the closing line for this show today. We will, for sure, you will meet Simon again. We will meet here again on LinkedIn Live. We will launch the next episode very soon, and keep tuning in for that. Thank you so much for a great conversation for everybody, no matter if you're in US, Canada, Denmark, UK, wherever you are. We wish you a fantastic weekend, and see you again soon on LinkedIn Live. Thanks, Simon. Thanks, Kevin. Go out and make barbecue, and have a good day, all of you.
Take care, guys. Bye.